Hi, in the previous video we learned about the basic of P&L. We didn't look at the template or the format of the P&L, but we just looked at what are the basic measurement, matching concept, what is frequency, and the major contents of the profit and loss. In this video we will be learning more about the total revenue income statement. Next video we will be learning about the cost of sales, and then other expenses, and then about the comprehensive income. So let's look at it now. This is the major you can say a summarized version of the P&L. Here you see it's an income part, there is a expense part. We will be looking at more details in income in just a bit, and then there are other comprehensive income. So what are the revenue here? The income can be two types: direct income and indirect income. So this is very short and sweet. The direct income means that whatever you are generating from the directly your operations and your business activities. And while the indirect income, or you can call other income, means that it can be another source incidental to the business activities. For example, sale of the items, or other GST refund, or other side of let's look at it now in this is the detail. So in this section here you can see there are in two notes, the number 24 and number 25. So those will be helpful to understand the nature of these income statements. Let's go through there quickly. 14, 15, 20, and then here is 25 or 24. Okay, so in this, say you can say the sales was particularly sale of petroleum products. This company is a petrochemical company, so they have petroleum products, petrochemical products, oil and gas. So total, this was a total revenue. Now okay, now we will be looking at the other income. Here you can see the other income is the interest, dividend income, non-operating income, and also gain on the financial statements as financial assets. As we said earlier, these are not related directly to the operations, but they are incidental. So interest on bank deposits is the they have been what they have done, investments or keep the money in the bank. Interest on debt instrument is the one that we saw earlier in the investments part, short-term investments part, that they are parking funds to keep the money to earn some kind of interest from the excess money over their requirements. So they invest in the short-term instruments. And then dividend income is also the coming out of the short-term investments, which is, or you can say is from long-term investments, but because this is incidental to the business, they are utilizing the cash which is over their requirements. And then there is gain on the financial statements, means that this has been sold or they have been disposed. So they have been selling the assets. How they are gaining the money on the financial statement, on the financial assets. So unrealized means that this is a loss of values, maybe at the market value. So the market value has gone down for the one which they still hold in the statements. So this is the other income. Now in the next video we will be looking at more about the expenses. Why is necessary to segregate the income to operating income and other income? A lot of time the ratio analysis is done through the operating income, because if you include non-operating income into the operating income, then the ratio will be disturbed. And also non-operating income is not regular. It's is not in regular nature. It may occur in one year, it may not occur in another year. So that is the reason why we record that separately, so that users know what is coming out of the business and what is not coming out of the, it's coming out of the business, but it's not really directly from the operations. So if somebody want to know the efficiency or the profits from operations, they can arrive at looking at the financial statements. So in the next video we will be looking at more about the expenses.